down fractionally, of course, as President Donald Trump did indicate a blockage of Iran ports through the Strait of Hormuz over the weekend, set to take effect today. Joining me now to talk more about the markets and where we go from here is Aquiles Larrea. He's a founder and CEO of Larrea Wealth Management. Aquiles, great to have you on the show this morning. What is your reaction to the weekend news as we start this trading week?
Yeah, it's amazing what's happening. There's definitely a lot of challenges, and we're really pointing more to the inflation challenges that are occurring at this point, where you have, the continual tension between wages and prices. We're also seeing the CPI, which was about half of it was housing, which was starting to ease a little bit, but now going back up. We're also seeing, in terms of deportations and tariffs, we're seeing much more of that making a bad situation worse at this point. But the war in general, gas, diesel, petrochemicals, and the whole industry is being disrupted by this conflict. And also, something came to light with helium. Helium is a critical component for chips, to manufacture chips. So that's another thing that we're also looking at, how fertilizer across the board, the pricing is going to go up in all these sectors. Even housing could be affected by this, because you have to have if you are using fuel to get construction materials to sites, that's going to be costing more. So inflation, the projections are, we're looking at about 4%, and could go as high as 4.2%. And we don't see that being alleviated just by a resolution of this conflict, any near-term solutions. But 4.2% with it possibly going higher in 2027. So that's another thing to take into consideration. We think you really need at this point to be super strategic on how you are going to invest your monies. First off, to look at infrastructure, to look at areas like defense, maybe not necessarily oil, but the derivatives, maybe in this particular case, the oil investments, but the derivatives, there's just much more potential for growth there. We're staying away from retail at this point. We're worried that consumer confidence, because of the higher inflation, will start to erode and go down. So that's another negative that we're seeing at this point.
So
you
Aquiles,
really have to be strategic.
Right. Let me ask about that. So what are you advising clients right now? You've laid the groundwork for us, right? Every moment is pivotal in this particular market, since it is a headline-driven market. But what are you recommending that your clients do to respond to the ever-changing headlines?
Well, we're most certainly not going into bonds, that's for sure. Even though we're seeing a little uptick in the bond market, we are really just looking at the coupons per se and buying high quality there. But we are sticking with infrastructure plays. We're sticking with defensive plays at this point, because we feel that those companies will continue to move to the upside. We also believe that certain technology companies in the sector are also going to continue growing, albeit at a slower pace.
Quickly, just in about 60 seconds, Aquiles, given this environment, what is your expectation for the Fed moving forward? Do we see rate cuts this year, no cuts, or perhaps even hikes?
Yeah, we were talking about cuts, one cut for this year and then beyond, but I'm actually thinking that we may have to do the opposite. We're going to have to raise interest rates should this conflict become prolonged. And we don't have enough information on this just yet. But if that were to occur, yeah, they're going to have to raise interest rates. And we should be aware of how are we going to respond to that scenario.
All right. Aquiles Larrea, founder and CEO of Larrea Wealth Management. Thanks for joining us this morning.
Thank you.